Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank in Singapore. Vishnu, as always, lovely to have you on the show.
As always, it is my pleasure, Brian.
Now, let's start by taking a look at how markets in the region are performing. We start with Bursa Malaysia, which is at 1,586.96. It's down marginally at 0.03%. The SGX is at 3,184.23. It's down 0.5%. The Nikkei is at 29,514.57. It's up 0.53%. Shanghai Composite is at 3,420.9. It's up 0.06%. The Hang Seng bucks the trend. It's down 0.33% at 28,517. The ASX 200 is up just under 1% at 7,147.2. Rounding off the numbers, we've got the Kospi, which is up 1.67% at 3,250.62. Now, Vishnu, what's your view on markets today? They seem to be overall trading broadly higher.
I mean, you're right, Brian. I think they're just taking over from what they saw in the US. US markets were broadly higher when they left off with the non-farm payrolls. But then again, I think the footing is not so sure. And here's why. Markets are undecided about what to do with things. I mean, a softer dollar is translating to be a good thing. Yields under control is a good thing. Yeah. The US jobs number missing by a lot.
But that was a colossal number. It was 266 versus expectation of 1 million. Was that a sobering impact on the market overall?
So that's the thing. I think there is a part of the market that's quite grounded, and for them it's sobering that we can't be counting our chicks before our eggs hatch in terms of the recovery. But there's another part of the market that's always going to be quite perverse. They're going to say, you know what, this is perfect, because it means the Fed will keep the taps on even as underlying activity recovers, and we can wait for jobs number to recover later. So there's that element to it that probably saw the US markets remaining quite buoyant despite that dimension, you know, that I hesitate to call it a degree, that level of miss. If it can still give rise to US equity markets that are higher, it does speak to a lot of other factors other than just economic data that markets are watching.
Yeah, because overall, let's look just this morning in Australia. Australia is a buoyant market. You've got retail numbers which are up 1.3% month on month, slightly lower than the previous month, but still business confidence in Australia is at an all-time high. So this non-farm payroll could be perhaps could be seen as basically an anomaly in the overall trend towards the global recovery story.
Yeah, I mean, so this is where markets can actually look at it from the point of view that they can have their cake and eat it, because some of the reasoning behind why the numbers are not strong is because US fiscal stimulus and the kind of buffer that they were giving during this period was so generous, particularly for the unemployment benefits, that workers are unwilling to come back just yet because they have enough from the unemployment benefits. That narrative is stretched, but if it were true, it just means that there could be a continued recovery, especially given that hiring intentions remain robust. And that has also been seen across markets. We haven't actually seen what will happen when fiscal stimulus starts to fade, but that's really the next leg, and markets are not fretting that, and instead, like you rightly pointed out, they are looking at a robust recovery still underway. What they need to digest at the same time, however, is the continued spread and outbreak of COVID with its various mutations, how that will impact markets even as vaccine rollout is underway. I think that remains the unknown, even if it's not the unknowable.
Yeah, and because I think that's basically and I would say that without being over dramatic, their biggest threat to the global recovery story. Because we've got the likes of India where COVID is out of control. We've now got a reoccurrence even in markets like Singapore, which have done a very good job in terms of COVID recovery. You've got places like Malaysia where we've gone back to lockdowns. So that's really going to be the biggest threat to this global recovery story.
So we can either put it down to the science of it, which where markets believe that the vaccines will continue to be adapted in a way that it is effective, and the rollout will at some point hit herd immunity, and we are out of this. There's also an aspect where markets is something we discussed before, are more attuned and better understand linear trends such as vaccine rollout, getting new vaccines, rather than exponential trends, which is a sudden outbreak that can get out of control, given how the outbreak works is quite different to how the pace of vaccination works. Yeah. So whether it is blatantly ignoring risks or pricing in risks in an astute manner and trying to look much further ahead, we cannot be sure. What we know is what you said is right, that the underlying risks continue to be there. They are latent risks. To what extent they are priced and to what extent that is distorted by still low interest rates and very, very stimulative central banks and governments is really for us to discover, because this movie may resonate a little bit with the previous movies, but it's not exactly the same. So we don't know the endings, and I can't give away the spoilers either.
Now, one of the things which is different in this movie, Vishnu, is the commodities markets, which are on a tear. The situation in the oil markets has obviously been made worse in the short run because of the weekend U.S. colonial pipeline issue shutdown. So what's your view overall on commodities? Where's the underlying demand coming from? And very importantly, is that already starting to make an impact on inflation expectations on the ground in Asian markets?
I think those are very good questions. In fact, these are exactly the questions we're grappling with as we're trying to form an outlook on this. So I'll start off by saying that commodity prices are perhaps most sensitive to reflationary type policy. So when you expect demand to come back on, when that is particularly fueled by public spending that's tilted towards infrastructure, this is exactly what we expect. And given the current nature where continued outbreaks can then also have a supply impact, not just a demand impact. You can't have mining activity going on at the same pace. You can't have logistics taking place at the same time, at the same run. So these things start to impact, and then you get a knock-on impact. So you have to worry about the supply capacity right now. We also have to worry about the logistics. We know that your Baltic Dry Index has been shooting up through the roof as well. So all these start compounding, and we get commodity prices going up. And if you notice, metals prices, particularly industrial metals, have done exceptionally well because it's much harder for them to mine a lot more than it is for OPEC to, forgive this term, unidle their spare capacity. So oil's reaction function is different. And as you rightly pointed out, who would have thought that hackers would lead to energy prices going higher as well? But that's our world today. We think higher commodity prices will feed in as cost push. Unfortunately, that could start eroding margins, really weighing on households in terms of their disposable income. And we may have to wait a while before we see demand pool picking up. Inflation expectations is really coming to the money point of it, putting your money where your mouth is. And our sense right now is that it will not impact inflation expectations in a manner that central banks need to get worried, because central banks' main worry will still be that this price increase, even if it gets into inflation expectations, is that it becomes deflationary, because the ability to demand higher wages because of these inflation expectations remains impaired. So whether or not they can feed into wages, that is our primary thought now. But I will say my confidence around that is somewhat wavering as we look at all these dynamics shifting around and really swirling in unexpected currents.
Now, Vishnu, we're at the start of the week. What are the key data points and events that we should be looking out for that will move markets this week?
You see, I'm supposed to sit here and tell you US CPI is coming out this week. And, markets being hung up on what the Fed may do and inflation being a big point should be caught up with that. But I think the non-farm payroll stole the thunder, because that's still going to give rise to the narrative that, look, if jobs are not increasing, wages are not going to rise, the Phillips curve is not an issue, don't worry about that. Fed is still going to stick to its playbook. So I think somehow that would be relegated, even if it remains pertinent. In our region, we want to watch out Malaysia's GDP numbers are coming out. We've got Philippines, we've got banks and BSP, the Philippine Central Bank coming out. We've got policymakers making some noise. And so what I want to look out for is the headline around this. Two headlines to bear in mind, and they're conflicting headlines. One is that the ECB may want to start considering paring back bond purchases. That's a taper type that will send the euro much higher, and as a corollary, the dollar lower. The other is ECB's REN has said that the ECB should adopt Fed type of inflation overshoot policies that could send the euro lower and the dollar higher. So my take is that the big things to watch out for this week is how dollar swings can come about due to cross-Atlantic ECB activity.
Now, Vishnu, as always, thank you very much for your insights.
My pleasure.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank on BizTech ASEAN Midday Market Watch. Please subscribe and like our Facebook and LinkedIn pages, and also check out our website, www.biztech.asia, for business and technology conversation.